going on, guys? Welcome back to another Discord only curriculum learning video. So in this one, we're going to be talking a little bit. We're going to do a quick breakdown of what exactly rims are. I think a lot of people are getting confused on this, and it really stems from a place, I think, in my opinion, of trying to overcomplicate it a little bit. It's really very simple once you kind of see what you're looking for on the charts. But in short, you are looking for price action to establish a trend along a dynamic level of support or resistance. Now, with our strategy here, with the 1348 EMAs, we like to use that 13 EMA as that dynamic level of support or resistance. So we're going to go over a couple of examples of this right here. And when we take a look at this SPY chart from today right now, there's a couple of things that we need to understand. Sometimes, especially on the live streams, you guys might hear me say something like, it's a rim day. What I mean by that is that most things have already crossed in the pre-market, meaning that you don't actually have an actionable cross or an actionable entry point that you can then take a trade. But as you can see on the SPY on this day right here on August 3rd of 2022, well, there was a lot of money to be made to the upside. Now, how can you then say, okay, let's look at the chart here, see where price action can go, and give us some key levels and key strategies to actually establish this trend to the up or downside. So when you're looking at price right here, as the market opens, you start to see that typical morning volatility. Market shoots up, market shoots back down. It ends up making a high and then gets that shark fin candle back down. But then what you see is the market kind of settle down. Price action comes back above this 13 EMA right here, and then it starts to hover along it, and then comes up and makes a new high. When it breaks that previous day high, or the day high that it had already previously made during that day, you can then start to see, okay, price is then trending in one direction. But you have to make sure that it is respecting the 1, 3, or 5 minute 13 EMA, and that's exactly what we saw today. You see one come down right here. You see price come down to this 13, get bought right back up, make a new high. You see price come down to the 13 and come right back up to new highs. And you see this trend start to continue all the way up. Now, if you did enter above these previous highs right here, well, you technically could have stayed in the trade all the way up to here when you see that first closing candle down below this 13 EMA. Now, this is one of the strategies that you can use if it's what I like to call a rim day, where there's not really a whole lot of crosses happening. But here's another way that you can use basically this rimming strategy to make sure that either you need to get out of a play really quickly, or you can actually stay in the play for a little bit longer. And a great illustration of this is if we go to this previous day right here. So again, as the market opens, we see price action act very, very, very volatile until it starts to slow down. You see this cross up here. You see closing candles above this 200 exponential moving average. This level of resistance right here, you could have taken this trade all the way up to this level of resistance and then got out of your position, which is something that we like to talk about a lot with our support and resistance levels. You see price go a little bit higher, but then it comes down right here and essentially rims this 13 EMA, and no candles are actually closing down below this level. Now, when we see that it's wicking down to the 200 EMA right here, yes, it is going to look sometimes as if price is actually going to close below. But again, with the volatility that we've seen in the markets recently, it's going to be pretty helpful to actually wait for those candles to close, see what the news is saying, if that move down is actually for a good reason, or if it's just a big seller getting out of the market. But the thing that I kind of want to point out here is technically you could have stayed in this trade the entire time until we get that closing candle down below this 13 EMA here. We never really did until all the way out here when you see price start to fall towards the end of the day. But there's actually two trades here. We have this trade up to resistance if you're trying to trade more conservatively, and then we have this rim trade all the way back up here. So I think what people are kind of getting confused on is, well, which time frame should I be looking at? And the correct answer to that is, well, all of them. You should be looking at the 1 minute, the 3 minute, and the 5 minute 13s, because some days you might see the SPY respecting more the 3 minute 13 versus the 5 minute, or you might see price really trapped in a tight range. It's continuing to make these new highs, and it's really respecting the 1 minute 13. Now, I do my best to try to help you guys during the live streams to really see where it's going, but all you have to do is just flip between the other time frames to see how price is reacting to these 13 EMAs on a variety of different time frames to see, well, which time frame is it actually kind of respecting the trend on, and then you can kind of stick to that time frame and say, well, price has been establishing a trend on the 5-minute or the 3-minute or the 1-minute. When it then comes back down to that 13 EMA again, well, if it starts to head back up in that right direction, there could be a trade here, or it's going to signify to you that you can actually stay in a trade that you are already in. But on the other side, if price action has already established a trade, let's just say on the 3-minute, for example, or established a trend on the 3-minute, for example, and you are already in a trade, if the closing candle then comes down below that 13, it could be a good indication that the trend is going to reverse and price action is then going to go against you. So if you guys have any more questions about RIMS, again, it's not this complicated concept that comes with a lot of rules. What you're essentially looking for is price action just respecting and following a trend on the 1, 3, or 5-minute time frames, respecting that 13 EMA. So that is going to wrap up this update on RIMS, guys. If you guys did have any more questions, make sure you guys drop it down below in the comments. And other than that, I will see you guys in the next one. Peace.